channel. On this episode, I want us to look at the market as an overall, where we are now, where we're coming from January till date. Today is the 2nd of August. We are still in bear market. The S&P 500 is in bear market, the Dow Jones and the Nasdaq. But the last couple of weeks, the last 2 weeks or so, it seems like the market has bottomed, but we're not sure. But we have seen some rally. It could be a bear market rally. It could be that the market has bottomed. We don't know. But how are we going to be sure that the market is bottomed? I don't think it's your duty or it's something that you have to really be looking at when the market is bottom. Why are you so concerned about whether the market is bottom? Because you want to invest? No, you shouldn't wait till when the market is bottom to invest. You should invest all along. This is why the strategy of dollar cost averaging. Yes, we're back in bear market. There will be bear market rally. There will be ups and downs. We can have on the way down, we may be having lower high, lower low, lower high, lower low, lower high, lower low, and it could turn around to be lower low, higher low, higher high, higher low, higher high, higher low, on the way back. But it could be that we are bottom, and given that the possibility or technically the US might be in recession, even though there's a discrepancy or there's a discussion on whether it is technical, because we've had 2 consecutive negative quarters, and when you have that, that's a recession, and US has experienced that. But the Biden administration is saying no, it is not. The job market is still strong, unemployment is still very strong. So this year so far they've added about 9 million jobs. So technically they are right on their argument to say that the market is not, that the US is not in recession. But if you go by definition, it is in recession. However, whether it is in recession or not, as an investor, your own focus should not be whether the market is in recession. If it is in recession, you take advantage of it. At every point in time, you should learn how to take advantage of the market. If you're watching the news, a lot of commentators, analysts will tell you, this is the level that we should attain because we're in recession. Look, the inflation is still above 8%. The Fed has a job to do, and the job is to bring the inflation back to about 2%. Now, we're not sure if the inflation has peaked. If the inflation has peaked yet, then that means the next meeting of the Fed, which is coming about on the 17th or 18th, maybe the Fed will reduce the aggressiveness in which they are increasing the interest rate. The last one that was done was 0.75 basis. Maybe it would reduce it, but so far, the way we are seeing things, by the end of the year, the interest rate might be about 4%. If the inflation is already peaked, we might not have it. It could be around 3.5%. Whichever way, as an investor, yours is to take advantage of every scenario. We will have a look at the chart for S&P 500, Dow Jones, and Nasdaq, and we will also have a look at the bond yield. We'll also have a look at the volatility index, the CBOE. Let us see where the fear index, to see. Look, the perception. Sometimes perception is not reality. The feeling that the market is down or that the US economy is in recession, that perception alone brings things down. Makes when people are not positive about their country, about their economy, it also affects negatively. We will look at these indices to see, but More importantly, our S&P 500, Dow Jones, and Nasdaq. We look at them technically to see where we are, what where we need to get to see that to believe that maybe uh, we are bottom or at the position that we might get to, and we think that the market is already back on a bullish move. We want the market to be back on a bullish move. So this is why you would not know the exact. I mean, the market is not going to tell you that I'm done in bear market, I'm going up. No, it is you that will determine with um, uh, technicalities and technical structures, and also the indices that will tell you that the market has bottomed and is on a bullish move. Anyway, let's have a look at the chart and let's see what we can get from price action. Let's have a look. Here is the chart for Dow Jones Industrial, and today is 3rd of August 2022. The market is closed. Dow Jones actually gained about 400 points today. We use point for Dow Jones, and as you can see, um, this is one of the reasons why people were asking, if we are bottom. This was the bottom so far. Let me identify the line here. Here was the bottom so far. That was the lowest point. That was in June actually. It was in I think on the 17th of June. But then after then we had seen some some rally. We there were It has not gone below that point, and then from 15th of July, we have seen a bigger rally that makes people think that the market has can bottom. And today again, the market gained and Dow Jones gained 400 points. And here on a daily chart, it shows that we are trading above 15-day moving average and 50-day moving average. This is 200-day moving average. So Dow Jones has gained, there about 5 or 6 percent the last 1 month, which is highly significant. Let's have a look at it on a weekly chart. So it's even far more glaring on a weekly chart. Let me draw the line here. Uh, as you can see here, you know, that was the bottom, but then we have had a rally. So we're currently, we're here now. The market has closed, and let's go back let's have a look at S&P 500. S&P, this is S&P 500 on a weekly chart. We can see that yeah, and we've had this rally here, we've had this here, and this is why everyone thinks that we might have a bottom here. And that was June. You know, the month of July had a good run up, and we have started the month of August. Today is 3rd of August, and the market has been bullish as well. I mean, it gained about plus 24.3 today. Let's have a look at it on a daily chart. On the daily chart, as you can see, on the daily chart is even more visible. We're actually trading above 15-day moving average and 50-day moving average, which is very significant. As you can see, this is where the bottom in June. So, so far so good. We have had a, a good run up. We have not gone below that particular point, so we yeah, everyone thinks the market is bottom given the bearish and bear market environment, the likelihood of being in recession, the Fed still hiking interest rate. Let's have a look at the Nasdaq. Then we would compare the three together. This is Nasdaq. In fact, Nasdaq. I think Nasdaq has had good rally than every other index. And this was the bottom here. If we're at bottom, this would have been the bottom, but we don't know yet. So it's an hypothetical uh, question. But then I'm using that as a base. That if we had bottom, but so far so good, we've had a good rally, and we're trading. It's above 15-day and 50-day moving average, which is they're all below 200-day moving average. But then this is on a Nasdaq. Let's compare the three indexes together. I already have it here. As you can see, the the red line here is Nasdaq, and this is S&P 500. The blue and the black is Dow Jones, and the three of them you would see them here. The Nasdaq, the Dow Jones has gained 5.51% in the last 1 month from July to date. It has gained 5.51%, and the S&P 500 has gained, this is very significant, 8.62% the last 1 month. The last 1 month, that's a good rally. And the Nasdaq has had 3.84% on the Nasdaq in the last 1 month. Guys, in the last 1 month, this is what the Nasdaq has done. Has gained 13.84% on the Nasdaq. So if you watch the CNBC, if you watch most analysts, there's a talk about whether we are bottom, because what the market is doing is highly different. It doing a different thing from what people anticipated. In given the environment that we have. But then it might be that this bear market would not last longer. It could be, like we had the COVID-19 um, market crash. It didn't last longer like most other market crashes in the past. Here is a chart for CBOE and the volatility index. What I need you to see is that from the month of July, we've had relatively confidence in the market, and it has continued to drop. The I mean, it's in the reverse. When you have high negativity in the market, then it spikes up. So the more the perception get better, then it drops down, down. As you can see, from the month of July, this is a 15-day moving average. It seems that it has been from that period, it has continued to drop down. That means it has continued to get better. The market has responded better. Market has been bullish. You know, Today the market is currently open, and the volatility index is around 22.10 or 12. It fluctuates, but as you can see within this downward channel, you would see that we have been doing uh, lower low, lower high, lower low, lower high, lower low. It keeps getting better. The more the negativity drops, which becomes positive for the market, it keeps dropping. So it gets better this way. But then this can also be an indication even though the Biden administration is talking about definition of a recession, that the U.S. is not in recession already. We've had two negative GDP. However, the economy is strong, as they say. So this might just be that the recession will not be a strong one, meaning that we might also have bottom on the in the market. But let's have a look at the Fred data, the economic. Um, okay, this is Fred data. Fred economic data. This also can be an indication, an indicator of the market. Now, you see, the inverted yield curve. Every time we have an inverted yield curve, this is what happens. It goes below. This is 10 years Treasury constant maturity minus 2 years, and you see, every time it crosses over, uh, then it, it's inverted yield curve. It's a negative one. It's more or less a recession. So we had it here, slightly, slight one here, obviously, uh, just a little, not deep here. But as you can see, it has dropped down below the line. So it's negative already. But we're here, and let's see what's going to happen. You have seen the technical chart of the S&P 500, Dow Jones, and Nasdaq. We've compared the three of them. You've also seen the economic data, the indices. You have seen the CBOE that gauges the fear index. Guys, sometimes the best advice is to just ignore all the noise. The noise we hear here and there, whether the market at the bottom, Nancy Pelosi has gone to China, Taiwan, he wasn't supposed to go there. All this tension between Washington and Moscow, Ukraine and Russia, grain or no grain. Look, in few years, all this will be behind you, and the market will have gone higher. So the best thing is to ignore it, and you just do your investment. Invest in the right stock, in the good businesses, the businesses that will give you good return. Thank you for following up on our channel. Thank you for liking our videos. We will continue to produce content that will support your investment journey. Thank you. Please call again.